Welcome. We have started a brand new month. It's May 1st. Scott Riley, the market update desk with Mortgage One, NMLS number 157524. Let's go through what's going on. We had PCE yesterday, Fed meeting notes. Got some information today. Let's go all through that here. We're seeing in the morning oil prices are trending a little bit of a surprise downward based on new possible discussions that were delivered through Pakistan from Iran early this morning. So a little bit of positive movement that way. An interesting thing we saw, Coality reported the average homeowner's equity now stands at over $300,000. It shows what's been happening with values and why getting in real estate sooner rather than later is a benefit to you. The April Fed meeting concluded, and actually that was the conclusion of Chairperson Powell's chairmanship of the Fed. But he did indicate he will continue his time on the Fed as a governor. In fact, this is the first time we have seen a Fed president, a Fed chairman, move from the chairmanship to a governor since 1943. Now he's deciding that based on he wants to see through any potential lawsuits or indictments that could come from investigating the building of the Fed offices and anything that could come from that. So he did not give a deadline on how long he would remain a Fed governor. Very interesting. So the Fed, once again, as expected, paused rates. What was interesting is three members actually disapproved of the easing bias language that was added to the Fed statement, meaning there was the potential for Fed cuts in the future if you read into the text of the announcement, and three of the members dissented against that. We did see Fed member Miran once again vote in favor of a quarter-point rate cut. He was the only one that voted for a rate cut. Initial jobless claims, surprise here, tumbled 23,000. Continuing claims fell to 1.8 million. We've been downward trending on both of those for the last 3 or 4 months now. It's a very interesting watch. Very different historically than what we've seen based on the current economy that we're in. And as we've talked about, a lot of that is due to gig work, where people can make more doing gig work than they can for actually getting unemployment benefits. PCE yesterday, it wasn't great numbers by any means, but it was within the range for expected. So that blunted some of the negative effect in the bond market. So a headline came up 0.7%, which, as we said, definitely high, but it was within the expected range. Year over year rose from 2.8 to 3.5%. Also not fantastic, but within the range of expected. Core PCE rose 0.3%, and year over year rose to 3.2, both within the estimates of what the market was expecting. So definitely didn't hit the market as hard as what it could have. Now, when we dove deeper into the report, there was also personal income data that was within it, showed that personal income rose almost double the expected to 0.6%. That we did also see the savings rate drop from 3.9 to 3.6 because we saw personal spending rise to increase 0.9%. So kind of offset the income increase. In GDP, we saw first quarter look of GDP definitely was a disappointment at 2%. The market had expected 2.3%. But what was really amazing is when we dove further into the data, 1.5% of that total 2% GDP growth was directly related to AI data center buildup. So without that segment, we would have only seen a 0.5% raise in GDP. Very, very intriguing. Wall Street, we're seeing more earnings come out from earnings season. Eli Lilly and Apple both beat on the top and bottom line when they reported their numbers late after hours yesterday. Both those stocks are up yesterday and today. The Dow's up, just barely over flat. It's up 17 points. 10-year Treasury has come down off its highs of 4.31. We're sitting at 4.41, I should say. We're now sitting at 4.38%. So we're down a touch. Now, keep in mind, 2 weeks ago, 2.5 weeks ago, we had gotten down to 4.22. So we're still elevated from where we were just a short time ago, but we've come down off our highs. Oil has crept down $3.75 this morning, and per barrel, it is sitting at 101.32. One big thing on annual data, Berkshire is holding their annual meeting starting this weekend. This is the first meeting that they've had ever since um, uh, um, Warren Buffett stepped down as chairperson. So interesting to see how that plays out. We're going to be on call all weekend. We do suspect it's going to be busy with offers going in. Give us a call. We'll help you out. 616-293-2189, the market update desk with Scott Riley. By the way, the Tigers pulled out a win yesterday and held off a sweep of their series. Give us a call, 616-293-2189. Have a great afternoon.